Ever wondered how to make your money work for you in the stock market? Welcome to the bustling world of stocks, where fortunes have been made and indeed where they can be made by anyone willing to learn the ropes. The stock market is essentially a public marketplace for buying and selling shares of companies. Each share represents a piece of ownership in a company. When you buy a share, you're hoping that the company will grow and perform well, leading to an increase in the stock's value. Plus, some stocks pay dividends, providing a regular income stream to shareholders. Why do people gravitate toward the stock market? It's not just about the potential for financial gain. There's a thrill in making informed decisions, the excitement of watching companies grow, and the intellectual challenge of strategizing investments. Over time, the stock market has proven to be a powerful tool for building wealth, provided one approaches it with knowledge and prudence. So, if the prospect of building wealth intrigues you, investing in stocks might just be your gateway. Before diving into the stock market, ask yourself, what are my financial goals? Investing isn't just a matter of buying stocks and hoping for the best. It's about aligning your financial actions with your future aspirations. Setting clear, realistic goals is the cornerstone of a successful investment journey. Whether you're saving for a down payment on a house, funding your retirement, or building an emergency fund, each goal will dictate a different approach in the stock market. Let's differentiate between short-term and long-term investment objectives. Short-term goals might include saving for a vacation next year, where safety and liquidity are priorities. Here, conservative stocks or those with less volatility might be preferable. On the other hand, long-term goals such as retirement require a different strategy. This might involve more growth-oriented stocks, which, while more volatile, offer higher potential returns over many years. Equally important is understanding your risk tolerance. This personal measure dictates how much market volatility you can comfortably endure without panicking. Knowing your goals and risk tolerance helps tailor your investment strategy effectively. Now, let's decode the basics you need to grasp before investing. Imagine the stock market as a vast network where individuals and institutions trade ownership in companies. These pieces of ownership are known as stocks. When you buy a stock, you're essentially buying a tiny slice of that company. If the company's value grows, so does the value of your stock. But stocks aren't the only players in the game. Bonds, for instance, are like loans that you give to a company or government, and in return, they promise to pay back the amount with interest over a certain period. Unlike stocks, bonds offer less risk, but also typically yield lower returns. Now, let's talk dividends. Some stocks provide dividends, which are a portion of a company's earnings distributed to shareholders. Think of dividends as a thank you gift for holding on to the stock. It's one of the ways investors can earn from their investments, aside from selling stocks at a higher price. Another term to know is market capitalization or market cap, which represents the total value of all a company's shares of stock. It helps investors determine the company's size and the risk involved in investing in it. Generally, larger companies with more stable market caps are considered safer investments than smaller, more volatile ones. Stock exchanges are the arenas where all this action happens. Places like the New York Stock Exchange or Nasdaq are where stocks and bonds are bought and sold. These platforms ensure that trading is conducted in an orderly and regulated environment to protect investors. With these fundamentals, you're better prepared to understand how the stock market operates. Ready to invest? Here's how you can start. The first essential step is setting up a brokerage account. Think of it as creating a gateway through which you can buy and sell stocks. Begin by conducting thorough research on various brokers. Look into their fees, the ease of use of their platforms, and the quality of customer support they offer. Each broker has its nuances, and finding the right fit for your investment style and needs is crucial. Once you've chosen a broker, you'll need to provide some personal information to set up your account. This typically includes your identification, proof of address, and financial information. Security is key, so ensure the platform you choose uses up-to-date encryption and offers robust protection measures. Now, let's talk about money, but not just any amount. Start with a small sum, an amount you can afford to lose without it affecting your daily life. This approach reduces stress and allows you to learn the ropes without overwhelming stakes. With your account funded, it's time for the exciting part, buying your first stock. But don't just dive in. Start with companies you understand or sectors that interest you. Consider using the tools and resources your brokerage offers to analyze potential stocks. And remember, patience is your ally. Stocks are a long-term investment, so think about growth potential over years, not days. Starting with these steps, you embark on your journey as a stock market investor. Investing wisely is key to maximizing your returns. Let's delve into some fundamental strategies that can help anyone become more adept at navigating the stock market. Firstly, diversification is your best defense against risk. Instead of putting all your eggs in one basket, spread your investments across various sectors and asset types. This way, if one investment falters, the others can help stabilize your portfolio. Next, understanding market trends is crucial. It's about recognizing the ebb and flow of the market. While it's tempting to chase after the latest hot stock, a savvy investor knows the importance of historical data and broader economic indicators. Patience and consistency are also vital. The stock market isn't a sprint, it's a marathon. Implementing a strategy like dollar cost averaging, where you invest a fixed amount regularly regardless of the stock price, can smooth out the highs and lows and reduce the impact of volatility. Adopt these strategies to enhance your investing acumen and safeguard your investments. Beware of the pitfalls that catch many beginner investors off guard. One of the most common traps is emotional investing. It's easy to let excitement or fear drive decisions, but remember, the stock market is not a place for emotional reactions. Always base your choices on thorough research and solid data. Another frequent oversight is ignoring transaction fees. While they might seem minimal at first glance, these fees can accumulate and eat into your profits over time. Always keep an eye on the costs associated with buying and selling stocks. Chasing high returns without understanding the risks involved is akin to sailing into a storm without a map. High returns often come with high risks, and it's crucial to assess whether you're equipped to handle potential losses. Moreover, don't underestimate the importance of continuous learning. The stock market is ever evolving, and staying informed about market conditions is key to making sound investments. Steer clear of these mistakes to stay on the right track in your investment journey. Let's quickly recap what we've covered about starting your investment in stocks. First off, understanding your investment goals is crucial. Are you saving for retirement, a new home, or perhaps your child's education? Each goal might require a different approach and timeline. Moving on, grasping the basics of the stock market is essential. Remember, stocks represent ownership in a company, and the stock market is where these shares are bought and sold. Knowledge about how market forces such as supply and demand affect stock prices is fundamental. Then, we discuss the initial steps to start investing. This includes choosing the right brokerage, deciding on individual stocks or funds, and setting up a diversified portfolio. We also explored smart investing strategies like dollar cost averaging and the importance of long-term thinking. Equally important, we highlighted common pitfalls to avoid, such as emotional trading and ignoring market research. Armed with this knowledge, you're now ready to take your first confident steps in the world of stock investing. Happy investing!